This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of June 14th, 2021. We knew it was going to be a volatile week. We knew the action would hinge off of the FOMC. What we didn't know was the violent reaction in the dollar that would follow what was really a non-event in terms of what the Fed had to say. Oh, big deal. Couple of Fed goons now want a rate hike in 18 months instead of 21. So clearly this is all overdone. And we got to talking about that by the time we got to later in the week. But as the week began, we were watching a trading range in both gold and silver, and that was the subject on June the 14th. I just can't even, I just flabbergasted by this. This is your last 15 days in COMEX gold from about the time that the dollar turned higher. Okay, remember I said that about the 25th of May? Look up the page at that dollar chart. Okay, look, that peak back on June the 1st, we were up at 1919, okay? And then we sold off sharply by June 3rd all the way down to 1855. Remember what a joke that was? Came back up to 1906 and then dropped to 1846. Now, how did I find these lines? Well, actually, I thought, damn, those look like they're parallel. I actually drew the lower line first, connecting the two lows. And then I drew a parallel arrow and lifted it higher, and look what I found. That's just stupid. I mean, again, you talk about charts being painted, non-randomness, that's a word. Jeez. So now, look at that gold chart of the last 15 days. Then the one right below it, look at silver over the last 15 days. Sideways. I mean, like straight sideways. If you would expect anything to be, one chart to look like the dollar index off of that low May 25, you'd think silver would look trending lower since then. But silver is sideways. In fact, it's up slightly from that date. Clearly see the movement to smash it back every time it gets above 28. But you can also clearly see the sharp rallies anytime it gets down toward 2750. And what's at 2750? Look at the daily chart. You can see that as well. Really nice little hammer thingy today. Wish it was green, but that's okay. Look at all this action now coming up on a month between 2750 and 2850. Again, think of all the contracts the banks are creating. I should just look it up real quick. If I go back to I don't know, middle of May somewhere. What was the open interest in COMEX silver back in the middle of May? I'm looking it up as I speak. 175,000 contracts. So now we're here at 200,000 contracts, means they've created 75 million ounces of digital silver and sold it to the specs in order to create this trading range. We are always concerned with inflation and real interest rates at TFMR. And so on Tuesday, the 15th, we took a look at crude oil. Did you know crude oil's up 50% year to date and looks to be breaking out to levels maybe not seen in a number of years? So we had an extensive look at the crude oil chart on Tuesday. Do you realize, I didn't realize until I printed this chart, crude oil with the rally today is now up 50%. Year to date. Maybe you realize that because of what you're paying at the pump. Oh, but there's no inflation. Come on, man. Crude up 50% year to date from 48 to 72. And you can see the run it's been on from 62 to 72 over just the last 3 weeks. Now look at crude on the monthly chart. Ignore that tail hanging down from April of last year when it went to negative $40. Okay, that kind of throws the scale of the chart off a little bit. But clearly there's a trend line from those all-time highs in 2008 through the peaks here in 13 and 14 before the great devaluation, disinflation smash where the dollar went from 80 to 100 and all commodities got killed in 14. Still staying under that trend line until February. Spending 3-4 months, including last month, somewhere around the trend line and now breaking higher. Gets above 75, 77, we're going to be talking 90, maybe even 100, maybe even 110. So where would all the commodities be? Where would inflation be? Where would the cost of gasoline be? Remember, this is the largest, most important input in everything is energy costs. What will that do to mining share earnings? You got to figure that in too. Anyway, crude looking like it wants to go higher. Wednesday's podcast were recorded shortly after the FOMC meeting and Chairman Powell's press conference. Already the market reaction was overdone and ridiculous. And of course, as we know, that only got even more overdone and more ridiculous as the week progressed. But back on Wednesday, we were quick to point out that nothing had changed. And again, these changes to the dot plot and this anticipation of maybe starting to taper in a couple of years really had nothing to do with the present day, but that's not what the market was focused on. Regardless. So on Wednesday, just some notes that there are a few people out there that noticed what was really going on, and we wanted to bring your attention to that. This, I thought, was the best depiction of the rationale for smashing prices today. This from DDB. The quarterly projection shows 13 of 18 officials favored at least one rate hike by the end of 2023. So 5 of 18 don't even want a rate hike before 2024. But that's somehow up from 7 of the 18 wanting to do that 90 days ago. 11 officials saw at least 2 rate hikes by the end of 2023. 11 of 18 see 2 hikes by December of 2023, 2.5 years from now. And then again, additionally, 7 of them a move as early as 2022. Now that makes it sound like early 20. No. Late 2022, 18 months from now. And this is all it takes. Incredible. So now here's at least some rational thought from that Scott Minerd guy of the gigantic suit, looking like David Byrne and Stop Making Sense. Remember, this is a guy who at Davos last year said Switzerland, silver was his number one trade. Well, that actually worked out pretty well for him. Here's a guy trying to actually make sense of it. Quickest possible timetable for the Fed. Start talking at August or Jackson Hole. Actually admit you're talking about it 90 days from now. Announce the plan to start. This is just tapering from $120 billion a month. In December, that's 6 more months. That's another $720 billion before you even start to taper. Actually, don't start tapering until the second quarter. So you got to add now another 240. That's a whole $1 trillion in Fed cash creation, debt monetization before you actually start to taper sometime around a year from now. Do it gradually. Finish tapering by second quarter of 23, which maybe gives you that first rate hike in 24, which is what? What did we say? 5 of the 18 think that's when it should be anyway? This is the quickest it could come. Second quarter 2024. I will remind you, we're wrapping up this week the second quarter of 2021. My God. Oh, shit. As you know, Thursday brought a huge smash. Once again, the 5th greater than $50 smash in gold since August of last year. You just simply take out those 5 days, gold would be still well north of $2,000. But 5 big red candles, and we are where we are. Now, driving this smash, there's a lot of algo-related selling due to a spike in the dollar. The spike in the dollar has probably about run its course. Big short squeeze, no doubt about that when you see moves like this. But now the dollar is very overbought and very likely ripe for a pullback sometime in the next few days. So here's the last 3 charts, or why it is I've got to sit on my hands, turn off my computer, take a working vacation so I'm not tempted, because this is all very, very tempting. And maybe you'd be best served to let it go ahead and take the temptation. Start with the dollar. You remember back on March the 30th, we called that top north of 93. Because the RSI and the dollar had gotten to 71. In fact, actually, I think it was only 70. And we said, look back over the last year. Anytime you've gotten anywhere near 70, it peaked out. It is very rare for the dollar index to get either that much overbought or enough oversold down to 30. And look at this chart. Again, got above 70 back in February of last year and then immediately fell from 100 down to 95. And then in the rally of the COVID crisis before QE to infinity went all the way back up to 70 and then immediately fell and went from 103 down to 99. got up near 70 in September at pushing 95 and then immediately started to fall. Got up near 70 in early March of this year and fell back. Got up near 70 in late March and then dramatically fell back. And now all of a sudden we're 70 again, 69.89 to be exact. Okay, it looks to me like a massive short covering, short squeeze over these last couple of days. Because that's about the only thing that makes sense. Why would you be buying the dollar? It doesn't make any sense. Well, because inflation's coming back. Oh, that's okay. So good. Buy dollars because they're getting less valuable. Look. There is no reason why the dollar shouldn't fall back tomorrow or early next week and back below the 200-day in a false breakout like we got in the end of March. The RSI is 70 again. All right? So you would think that would be good for the metals. We'll see. And on Friday, June the 18th, we look to wrap up the week with an extensive look at all of the charts after the massive smash the banks brought us this week following the FOMC. The one thing that has my attention is silver. It is clinging to its 200-day moving average, and we are right ahead of the July silver contract going off the board and the all-important option expiration next Thursday. Would not at all surprise me if we don't get another dip below the 200-day, as we saw in late March and again in early April. But that dip, after running some stops, will likely be reversed. Why? The dollar is dramatically overbought and due for a pullback. And when you get that, and once you get some stops to run, we're likely to get a sharp move higher in silver. So I'll be keeping an eye on that as we go into early and middle part of next week. In the meantime, I hope you enjoy your weekend. I hope you enjoy these weekly podcast summaries. Please join us at TF Metals Report. A daily podcast is just one of the benefits you get for your $15 a month. We'd love to have you there. Hopefully, we'll keep you abreast of the precious metal market situation so you're not caught blindsided by the events of weeks like this. Again, thank you for listening. Have a great weekend.